Hello, welcome everybody. I hope you enjoyed the last couple YouTube videos. I wanted to just quickly remind everyone we've got our summer option workshop coming up. That is going to be on Wednesday, the 12th, the 19th, and 26th. Before we get into end of month analysis, we're going to look at the scans, what we are looking for, how did we end the month of May, and what looks good going forward as far as new trades. Before we do that, please take a second to look at the risk disclosure. And remember that trading does involve risk of loss. All right. So our live trading room, we do a couple things here. We manage a smart portfolio. We also do an advisory service with a newsletter, and a lot of the trades in the newsletter we talk about, obviously, in the live trading room. Here's some of the current recommendations. This was this week's trade newsletter for the shortened 4-day work week, and we did 4 days of work in 5 days. Wow. Or 5 days worth of work in 4 days. Basically, every week I come out with my, the one thing I forgot because it was a Memorial Day weekend, I forgot to put the weekly thought. It's usually some quirky little statement. And then a couple things that, you can take a second if you want just to pause the video or sign up for a free trial if you've never taken this. And the newsletter comes in association with access to the live trading room, which is more dynamic than most people realize, because the live trading room allows us to post alerts that get sent. If you sign up to the mobile app, you'll get those texts of actual trades. And I'll show you a few that were just unbelievable. Many of you saw this on the YouTube videos that I did on Toll Brothers and what we did with Walmart and Target. And it just really some neat and powerful, amazing trades. Last week, we announced that we were coming into this cycle, something that I wrote about in Futures Magazine back in 2001. And you can talk, and again, you can read about this little quirk about it. And what we were looking for was a mild pullback. Nothing big, but a mild pullback nonetheless. And we targeted that correctly. And that's why we did these options right here. The June 7th, 527, 520 bear put spreads coming into this week. We covered them today, so we're out of them. A few trades because we were looking for a pullback, still trying to buy Apple on a pullback. I'm not really chasing Apple up in here. Valero, we did add. They got filled on that yesterday, and Biogen got filled on that yesterday. So bottom line is we put out a lot of trades, and if you notice here, what's interesting is we're still long exposed with the Russell, and we're going to buy back those short sides of the spreads, because the theta is going to kill them, and did kill them. And that's the whole purpose of doing spreads sometimes, right? If their expense of the long option that you want to get into is too costly to pay down the expense, you sell or spread off a higher strike. And that's why people do. And I prefer at times, especially in equity markets, I like to do vertical spreads. Now, if you notice, those expire in June 21st, and the options on the SPY is June 7th. And you would probably, if you come to the conclusion that, oh, he was looking for a small pullback and an ongoing uptrend, then you'd be 100% correct. AT&T, so these are all the positions that were long and where our stops are. And you can take, again, time, Boeing, for example, Pfizer, Newmont, and we'll be adding to a lot. And I think as we get into June, we see a lot of different changes from a seasonal perspective. We should start to see an increase in drugs and biotech. So that's why we have exposure with Pfizer and Biogen at this point in time. All right. So let's go and talk about the live trade room before I get into the analysis for the end of the month and new fresh buy and sell signals, which I think you're going to be interested in. This particular month, there's been there's been a ton of great trade that we have alerted our subscribers to, and based on technical analysis. And it's not just any technical analysis, it's the indicators that I've created and I share with you. And I really hope that it's teachable. And I have this passion to help people. And I think if you can learn a few of these indicators, it's going to immensely put you on the right side of the market, because I tell you, the market is tricky and treacherous. And there's no doubt about it. There's a lot of hanky-panky going on in the market. And I think another thing that's really makes the market a little more, every year is something different about the market that makes things challenging. One is there's so much money in treasuries. It's not parked in mattresses. People have taken money out of the stock market and put it into short-term treasuries, maybe twos, maybe they're into T-bills, 9-month, 1 year out, and they're earning 5 or darn close to 5% returns. And so bottom line is, while their market's locked up, risk-free, earning 5% interest, that means there's only so much finite equity in the equity markets. And so if you can visualize these mega cap names, Amazon, Microsoft, Google, Meta, Netflix, Tesla, which has not had as much influence in the market valuations. But if you take a look at some of those names, they go up and down. You're going to move the market in the SPY and the Qs rapidly. And that's what's happening in the marketplace. Plus, combine that, some of these earnings that we've had have been absolutely unrealistic in their moves because they've been moving on vacuum air moves. So when we take a look at, for example, I'm just going to share a few things that we've done. Tesla. Let's take a look at this real quick. Now, what I do is I post this particular symbol, TSLA, and this is exactly, if you signed up for the alerts, this alert went out on May 14th at 1 o'clock in the afternoon. You'd get a text. And if you'll notice, I mean, it just pretty much alerts you to, this is the stock. I think it's ready for a huge drop. Here's another trade, and we can get going on, whether it's Love or Schlumberger, which is still an active trade position, a stock. But we're going to start somewhere because, I mean, the list just goes on and on and on and on and on about what we look here in this market. We put out recommendations, risk, as well as the profit objectives, and work with people. So we're going to go back over the last 2 weeks. I'm not going to go through every trade, but a couple of important things. So back on 5/14, which is here, and we take a look at Tesla on 5/14. Here it is. I'm looking at the market itself is looking to me like the rally is on weakening volume structure. And I said, listen, it looks like they're in the May 17th. We're talking 3 days out. It looks like here that there's some volume. Someone's looking for a downdraft by the 17th. And so I made a recommendation, buy the 175 puts or do the 75.70 bear put spread for $1.40. Look for downside for a day overnight. And so the market opened higher, traded straight back down to 172, went sideways. Next day, takes a low right to 170, right in the sweet 171 to be exact. And I'll type it up for you so you can see it right there, 171.43. Really good stuff. For Wednesday, focus on adding to IWM call spreads. Go out to the July, the 210, 220s. Right now, the 220 calls are down to 83 cents. Buy those back, man. Get out of that. So they're worthless. And now we can see some upside. So we were targeting that. We've got Tesla here. Bottom line, this was on the 15th. Take half off. You're making money. We bought them yesterday. Walmart. This was an earnings play. We're looking for Walmart implied move. One could take a bullish bias and buy the 60-62 call spreads and pay 65 cents. In case it's a bearish report, you know, do a 59.57 bear put spread for 62 cents. Either way, it's $1.20. Guess what happens to Walmart? WMT. Walmart explodes to the upside. So that trade paid off. Alibaba, you could look at that. We've got Snowflake, did well there. Walmart beat, bought the call bracket side, just exit the bull call spread, make your money, and we did. JD, Sam Adams. Now, this is one that's interesting because I said Sam Adams is near support near 275. And we'll get to Sam Adams, should be down in here. There's Uber, there's Baba, there's JD, Palo Alto Networks, Zoom, PDD, another one. That was pretty wild. Let's take a look. PDD. I don't mean to get sidetracked and show every single trade of every single day, but this is, you know, we're fairly active here. And as you can see, 57.5 to 65, 7 wide for $1.55. PDD at 520. Here's 520 right here. And 1, 2, 3, 4 days later, the stock's trading at 163. Beautiful stuff. Zoom, Target, because Walmart went up. A lot of people thought Target would go up too. But what we saw was interesting. The Target had negative volume trend. If we share with you my volume indicator, what is the trend of the volume? It's moving down. What is the relative performance, the PMC indicator? This is my tool that I created. It's on TradeStation. It's on Wealth Charts. It's on, of course, Charles Schwab's TD Ameritrade Thinkorswim. I don't know what just Thinkorswim, I guess, is everyone knows that. And if the relative performance of a stock's going down, and the volume's going down, it's probably not good. So what we said with Target was, I'm more bearish Target because the technicals are not supportive, and I prefer a simple May 28, 48, 43, 5 wide bear put spread for $1.10. Beautiful, perfect. The earnings came out; it was a big miss. Toll Brothers. Let's take a look. TOL. Now, I think I added these to and I covered these on the YouTube channel. So I don't want to get into every single detail about those particular ones because it's like rehashing same old news. But again, Toll Brothers, we were looking bearish because the indicators were not bullish. Almost the same pattern, by the way, as Target. What an interesting combination. Toll and Target have nothing to do with each other. But anyway, that was another one. 125, 120 bear put spread. And what happens? The market goes right down to the sweet spot at 120. So bear put spreads, if you know how to target around the implied move, if you know that you're not going to see a market move all the time beyond the implied move, then you want to put in a spread order, especially if you're taking an earnings trade. And earnings, because there's an event, the implied volatility or the premium prices increase in value. Some traders like to write premium because of that expanded valuation. But I think that there's a better way. Everyone has a different preference, whether they're a buyer or a writer of options. If you can improve your directional skill set by a few good set of tools, then I think you have a better edge. So far as you can see, we've racked up a few great ideas. Here's Sam Adams. Let's take a look at Sam Adams real quick. Back on 521, we're expecting to move maybe 272s, 275. There's a gap down there. There looks like a little bullish convergence pattern. And I think we could try to buy a June 21st expiration 280, 290 call spread for $2.80. Risk half the premium. Let's take a look at Sam Adams because this is wild. Now, again, this was posted and sent out as a text at 3:23 on the 21st. Here's the 21st. So get in on the call side. I don't know if it's going to go down another $5, $6, but the technicals were looking better. Define better. Well, at the end of day daily analysis, real simple, the lower the stock was going on 521, the volume indicator was reflecting there wasn't a lot of selling pressure. And the relative performance was not weaker. Its lows, this area in here, was a lot lower than the current level when it was on 521. So it's probably due. I don't know if it's going to be another week or two, but it's probably within a couple bucks of a pop. Now, I don't have insider trading information at all, but it's amazing that Sam Adams today, and I mean in the last hour, right before the close on Friday's option expiration, rumors hit that Sam Adams might be selling to a Japanese company, the same guys that own Jim Beam. Now, I don't know. That sounds pretty fishy to me, but it is a trade that showed up on my price volume indicators in a stock that was oversold, and that's exactly what we did. And so the list goes on. There's, most people, say, hey, put a trade on, and they forget to tell you what to do. Well, what we did is we actually tell people how to get out of trades and, work orders and exit on bids, for example, take some money off the table. Lululemon, this was another one. Lululemon, I'm not just a one-trick pony kind of guy where we only do vertical spreads. This is when we did a diagonal calendar spread on Lululemon. And Lulu was another one that I thought was well oversold. Volume readings were giving us a huge bullish convergence. And so what we came up with the concept was, listen, I don't know if it's going to be immediate or down the road, but I also don't want to be, and I never sell naked options, never, because the downside risk is unlimited to a degree, and your profit potential is usually limited. And if, let's say, someone came out and said Lululemon's material causes skin cancer, for God's sakes, and you're short a downside put, you're out of business, bottom line. And so therefore, I think you have to have some protection. So in this case, we sold the June 7th nearby expiration 285 put, collected 955. We bought for more protection to define like a stop loss, for example, but with more time, the June 14th, and got the difference. And so if the market goes by without going to 285, you make money. If the market rallies, the premiums erode. The one that has more time actually does loses a little bit less relative to the one that has less time. So we actually exited that trade today on a nice rally in Lululemon. So that was a nice way. Snowflake, we've got NVIDIA, ARM, the VIX, the PDD. Well, these are just a less Salesforce. This is another one. This was phenomenal stuff here. CRM. Who saw this coming? We did. And look at the relative volume. Look at the PMC leading up to earnings. Everyone was long this stock because why? Everyone's long this stock. They've just made money in earnings for the last 2 quarters. It had a kind of a dip already, and people thought that this had no chance of going down. My volume indicator was saying, whoever the powers are, they ain't buying it. They're distributing. They're liquidating. And so if you look at my exact comments, Salesforce, earnings, implied move, 16. Indicators are negative. Price support near 240. I was a little off on that. Almost double expected move. Long shot, bearish trade. June 7th, 252 half, 245 bear put spreads, pay $1.45. Bottom line, got filled on those. And if you take a look here on a 60-minute chart, let's line that up again. At 528, here it is, at 528 at 1 in the afternoon. So giving plenty of time for my clients and subscribers to act on it. Work it into the first hour of the next day if you don't get filled. That's exactly what it says. What happened the first hour? The next day, rallies up. Everyone gets filled. Now you're like, oh, do I really want this trade? Well, you wait till earnings came out, and yes, you really wanted that trade. Very nice move. Chewy. Who saw this one coming? CHWY. Here's an interesting aspect. We got stocks going down. We got Toll Brothers down. We got Target down. You got Walmart up. We called every one of those directions correctly and targeted price moves. Salesforce, we targeted to the downside. Yeah, we left a little bit of money, but we took a nice trade out relative to the amount of money that we spent. As far as Chewy is concerned, this is another one on 528 we put out and said, you know, what's different about Chewy is stock's not really going anywhere. But even on balance volume is showing improvement. The relative performance is showing improvement. My volume indicator shows somebody's buying it sneakily ahead of earnings. So we're probably a little bullish. And I'd say a low risk trade was too wide, 17.5, 19.5 bull call spread for 50 cents. Beautiful trade, 4-to-1 risk reward ratio. Hewlett Packard. Yeah, you can't make this stuff up, gang. I mean, you can't make this up. And so when people see me at trade shows and I show them how I'm using this stuff and I show my accounts and you see me maybe at the Wealth Expo, you know, we've done that for now a few times. When you see that and I share with you what we're putting together, there's decent rhyme and reasoning behind the methodology. And, you know, Hewlett Packard market sideways. You know, I think simply put, it looks like more. I'd go out to the June 21st. That was my only mistake. A 2.5 wide for 75 cents. Why was I so cheesy on that? Cheesy meaning if I'm so bullish, why wouldn't I just buy the stock? Because nothing's ever a guarantee in its earnings. It's a lot of times on earnings, companies beat top line, bottom line, give bad guidance, or maybe the stock's already rallied and they take it down. So it's a binary event. It's not an investment. So you've got to have a defined risk strategy and be able to participate in the move. We got Whirlpool. Looks like it's a move. Chewy, we did that. Nike, looks like we're going to be posed NKE for a daily high close doji and look for a rally. Well, there's the rally. And that was put out on, I don't know, 529. And that was just this week, right? Then we had, listen, join me today. I do this as an alert, if you want to come into the trading room and listen to my breakdown. I'll do everything that we're going to talk about here in an end-of-day situation. This is one of the few trades that did not work. And this did not work. And I always like saying, hey, we've had a good run, as you see. You can pause this video, go back and read everything, and you can go take a look at what we said. It's time stamped. So let's take a look at some of the ones that did not work. Okta is one. Now, what's sad about Okta is the implied move is $11. It traded at 103 the week before. That's what I'm referring to here. I see recovery near term, and there I want to do a broken wing butterfly. So again, we do diagonal calendars, verticals, and now a broken wing fly. Because I don't think the market's going to be expressly extremely bullish, and yet I don't think the market's got an opportunity to the upside. Now, unfortunately, while the stock did rise, and in the pre-market, the extended hour was trading at 104, and in the pre-market, it was trading at like 105, I think, something like that. It opened, the day session opened, as you can see, and it just traded, the high was 101.5, right at the sweet spot of the middle of the body of the butterfly. And unfortunately, you had to act quickly on that one. By the time I was talking in the room and on earnings on that open on the next day, the stock was up, it gapped higher, and I was telling people, listen, if you can double your money, my rule of thumb is on a double, get out of half. And hopefully, because I didn't have a chance to type that up. But here's another one. That's the bad news on that stock. So not a killer, and again, a good example of where a company beats, moves higher, and just gets dumped on in the process. So let's take a look at AI. It was another one we did. Implied moves $3. Go out to the July. You can see it's a neutral position. It says it's targeting the trade around $25. I like the June 21st, 25.27. There's another one, 25.27 call spreads for 70, a $2.50 wide for 85 cents. Perfect, same story. Volume momentum, not the OBV. OBV would have said, oh, this is weak. It's making a new low. On balance volume tracks volume, but that's trending lower. What's going on here? It's trending higher. So my volume indicator is a little bit better of a mousetrap, and that's why we have it on TradeStation and a very few select platforms. And so therefore, one thing that is also helpful is the PMC. The PMC, while the stock's going down, the relative performance is improving. So that was a powerful tip-off that you might see some upside. Then there's Best Buy. Now, Best Buy, BBY, we have in our portfolio in the newsletter anyway. Best Buy was one of the positions. We were long a full position with a defined risk stop. So this one we already had. But for those that wanted to take a trade, I gave a couple things. I think, therefore, a small appliance and media components are going to improve Best Buy's performance. Option volumes are slim. And I noticed that there was a small, unusual volume pattern with 5,200 volume and 350 open interest in the May 31st 70 strike calls. Let's take a look at that, because that was an interesting trade. And here's why. Because at the time I posted this, Best Buy, it was in the money. So let's take a look on 5/29. Here it is. Stock's trading at 72 and change on average all day long, 71.80, 72, just right in there. Somebody does and buys in the money. Now, that's a stock replacement strategy. If you're thinking the market's going to go up and you don't want to buy a lot of theta and lower implied volatility, instead of buying an out of the money option, you buy an in the money option and you get a better delta. And it was, as you can see, what does that mean? 65 delta means it's going to move 65% of the underlying move to a point, and then it's going to move 80, and the deltas will expand the more it gets in the money. So this was a high delta trade, and someone had a strong conviction Best Buy was going to rip, because most people don't spend the money to do an in the money option. And they paid $3.20. I said, listen, I like for a gamble trade, because I'm not a hedge fund and I'm not managing $100 trillion. I like the 75-80 bull call spreads for the June 21st expiration. And as you can see, the stock is now at 84. Those are all intrinsic. So take action on those. If you took Hewlett Packard, money winner, CRM, money winner, Okta, money winner with a broken wing butterfly, you had to act fast. AI, money winner, Best Buy. Again, place orders before the open to sell half at double your cost. I actually put that out so that people know that they get, oh yeah, I got those positions, I forgot. By the way, here's what we did on those puts that I talked about with Spider. Get out of half. And then the list goes on. Marvell, GPS was another trade this week we did. GPS, gap, the baby gap, GPS. You're probably sick and tired of hearing this. But man, another one for earnings that what prompted us to look at gap. Look, on May 3rd, on the 30th, right here. At what time? 2:28 in the afternoon. Volume trend is moving expressly green positive, relative performance. And that's why I say the technicals support this. So if you're interested in, if they pull a rabbit out of their hat and you're a gamble trade, you've had a good week, I think the 24 to 27 call spreads will do well for 68 cents. I mean, $2.50 wide. Look at the percent change of return for 68 cents per option. Unbelievable. Yeah, would it have been better to buy the stock and have a full boat position on and just be naked net outright? Sure, but coulda, woulda, shoulda, right? Zscaler. I just said I'd be a buyer on a lower open after earnings. I just didn't have a play for it. Costco beat bottom line. We did one for Costco too. That was pretty interesting as well. COST, and we told everyone Costco more likely is going to come down, and 785 to 772 bear put spreads. They're expensive, but look, if you've made money this week, maybe don't take it. Maybe don't press your luck. I don't know what to tell everybody. Some people could do it. I think they were going to miss, but they didn't. They beat, but still the stock market, it went down. And at one point, it was trading right near 788. Costco beats, stocks down in extended hours. We let everyone know that. And again, here at this morning on 5:31 at 10 o'clock in the morning, listen, Costco, place orders, exit that at break even, which you were able to get. And then here, email alerts sent out to offset remaining bear put spreads. Look, we did that at 11:05. So let's take a look at SPY right now in the SPY, and then we're going to change this time frame. And remember, here is at 11:05, more or less, right in here. At 11:05, get out of all your puts. So we bought puts high and we covered them and we bought them back low. In other words, we made a nice trade. And I wish every trade went like that. You couldn't have played that any better. We were near a pivot support. The volume was not moving in precipitous decline. It wasn't as negative in the SPY. So therefore, that was it. Here, Sam Adams at 3:07 this afternoon. I remember I said we made recommendation to do this back on May 21st. Here, Suntory Company is the Japanese company. We're looking, bottom line, get out at 950. We actually replaced that order and got out around 870, and boom, trade's done. It's over. What a nice trade. So that's a lot of shooting, and I think you would agree to this. It's like picking stocks to go up, down, sideways, left, right, up, and down in this environment is pretty crazy, and that's one of the things that we've done. So what we've are consistent in a lot of stuff we look at. This is the page that I use in the main trading room. This is Thinkorswim, by the way. So you should have your charts set up with, in fact, in the algo room, which is kind of an interesting perspective. The algo room, the model went long SPY today, the long entry today in SPY. SQQ was long, went short. So we got a lot of action here based on professional trading indicators and algorithms that we put together and allow people to use. And we cover, and this is based off the main stock room, the Russell, which we have exposure now, as you saw in the video. And we cover things, and definitely I look at the VXX because of volume considerations, not the VIX. Microsoft kind of irritated me today. I'm not going to give you a whole story about it, but I'll tell you this. I was expecting the market to pull back to that gap and fill the gap. And I actually told the live trade room, I said, this thing gets so close to that gap, it doesn't get filled. I'm going to get pissed. And I don't want to buy it right in here because it's just too damn close not to fill that gap. And then in the last hour, they just came back in and bought the crap out of it. Anyway, Nike had that green bar right there. I put that there myself so everyone would know if it gets a close greater than that line, you got to get long. And hopefully people got long. So we had some good stuff. Sam Adams, because we were in it. Google, because it runs the roost of the market. And so now let's get into what you wanted to hear. What are we looking at in the next week ahead? And for that, we're going to take a look at some scans. So first off, we don't have to really look at the scans. All this blinking. Here's what's the first and foremost. At the end of the month, what do? I look at monthly signals. And this tells me how many stocks are getting buy and sell signals. So what's the real condition of the market? So what I do is I line up my chart, my radar screen with stocks that are going to have earnings, right? So I know, and I list it by kind of day. So we had Kava, Box, Chewy, and I take a look and I cheat and I look at my person's pivot, support, resistance. I look at the condition of the market. Take a look. What is the condition of market? What's today's volume compared to past average volume? What's the range today compared to the ATR? What's the person's market catcher showing? If it's negative, on like Pepsi is negative, I ain't looking to buy it until it starts to turn into like what's called fuchsia, which means the relative strength is improving and we get a buy signal. By the way, this is Box. Box ended up in a weekly buy, reversed the sell signal or the downdraft or equal and opposite kind of candle pattern. Box is still in a monthly buy. Therefore, the longer term key reversal is working. And that was just you probably want to look at Box on a dip somewhere around 26.17 next week and try and enter into it based on that analysis. So by the way, you had Box, you had Chewy, all generate fresh new weekly buy signals. What I would stay away from is any stock that a week like this that generated new fresh weekly sell signals. And Adobe is one. So it might try to retest the lows one more time. It's at pivot monthly support. The relative performance is weakened. Volume is weakening. It didn't give a dead cat great bounce. But Adobe, I wouldn't sell it down here. I would wait to see better volume and a daily buy signal before I re-engaged. Weekly sell signal came in Amazon. Weekly sell signal came in Carvana. A weekly sell signal came in this MongoDB. It isn't a weekly sell from the prior week. The monthly went into a sell, but it's too extended. Stocks that get way extended up or way extended down tend to get little mini dead cat bounces. So my guess is you want to watch this over the next couple of days for improved volume readings and Mongo, somewhere between, you can lightly trade this thing from, it dips from today's intraday low, somewhere around 205, 200. You probably get a dead cat bounce rally up to around 268, 270, right into that consolidation pattern, unless things really change on volume condition. You also take a look at Super Micro, weekly sell signal. I'm not a big fan of that because if you take a look at AMD, it's still in an uptrend. So let's focus now on two things. Where's the strength of the market? Well, let's go top down. The S&Ps, the breadth of the market improved a little bit. The Russell ended up in a daily buy signal. So I think and the breadth of the Russell was almost 3-to-1 positive today. 1,300 advancers, that's what 1,300 stands for, versus 580. So I think that's why I'm so still engaged in Russell longer term and roll out and would strongly recommend the July 210, 220 still, because if this thing does break out and we get a nice performance of continued volume with breadth in the market, this is one that could probably see a breakout of this sideways range that everyone's been waiting for. Listen, the size and the amount of length of time from December, January, February, March, April, May, the longer a sideways range, the bigger the breakout. And so, eventually this might be the new frontier for profit, especially if people feel that the second wave of AI is coming. It's going to be in lower tiered stocks that benefit from artificial intelligence. The mega cap names can still make money, but maybe the mega caps got to do something with their money and start buying little companies out that might take some market share from them or competition. And so therefore, that's just one little thesis about the Russell. Meanwhile, the Dow generates a improved relative performance in its advanced decline. So it wasn't a bad day for the overall market. One day dead cat bounce off the low doesn't turn things around, but I think certain sectors can improve. And that's where we would say, you know what? I think for right now with monthly signals, Datadog, Fortinet, IBM, Cloudflare, Okta, Zscaler, and what do we got here? Fastly, and even Snowflake, they need work before we get engaged in cloud storage stocks. They seem to be the weakest link of the technology software sector. So I think that's one that, you know, it's oversold, so expect a little bounce, but I wouldn't get too engaged in that heavily in the coming weeks. So don't chase a rally. In other words, if you get a rally, it's a dead cat bounce more than likely. I think Alibaba, by the way, is in a monthly buy. It had bad negative news. Listen, it went from 0 to 100 in 3 weeks, and everyone bought it. And it's CNBC and Fox and all the business channels promoted the hell out of China's doing well, and everyone jumped in on the high after a rally. There's an ETF, Yin, I believe it is, YIN. It's a 3-time leveraged ETF. You know, people chase that. I mean, you buy a stock at 33, it goes to 24, you're going to get slapped around silly. Dips probably back down, wait for a little intraday buy signal on better volume. And, you know, if you want to play the whole Chinese spectrum, go with Yin versus going with maybe a JD.com or a PDD like we did, or Alibaba or JD, or you can go with the pure ETF and play it non-leveraged with the FXI. There it is. But you get more juice, more VIG out of the Yin relative to FXI. All right. Now we've got a bad thing here, because this is one that I actually have in the newsletter. That's a monthly low close doji. That's no bueno. Last month was a doji, which means a decision. But let me ask you this. Is the trend, would you call that trend up or down? You'd say the trend is down. So a low close doji only works after an uptrend. And then after an uptrend, that's a sell signal. After a downtrend, not quite a sell signal. Now, I'm not pleased that it closed below last month's low. I'm not going to lie to you, to be frank. But I think maybe it could have been just an option expiration kind of deal and a coincidental factor. And we'll see how it really opens coming into the beginning of the month, which would be, well, Monday, right? Anyway, here is the monthly signals. I'll let you look at them. I already told you we want to stay away from some of these names right there. And what's kind of a new deal is Archer Daniels Midland and Bunge in the ag space. Seems that we're going to probably want food. Royal Caribbean, it's not a high close doji because it's after, if it was down here after a downtrend, this is just another fake buy signal, right? I don't trust this is a high close doji after a rally. We're looking for a high close doji after a decline, inverse of the low close doji. I do think that travel and leisure, too many stocks like Airbnb, Carnival, Expedia, Marriott, Norwegian Cruise Line, Six Flags Great America. I just don't think that Royal Caribbean is going to survive all by itself. So that space is starting to weaken. Crypto, Riot Blockchain. Everyone was really enthralled in looking at Riot Blockchain and Mara because the Bitcoin craze. And we might see, because maybe this is something going on with the SEC and Ethereum new ETFs, maybe money's coming out of that space that has to do with Bitcoin for a little bit. So Mara and Riot might be under pressure just a tad. Look, the market didn't go down, but the volume made a new low. So to me, volume leads price. I would wait before looking at that. But the fact that there's a couple sell signals in that space doesn't give me the warm and fuzzy on a defined trend. So let's get up to where it really counts. Interesting. We've got L3 Harris Technologies. AT&T is still in an uptrend. It's not generated I was talking about new signals, right? AT&T is up, T-Mobile's up, and Verizon did go up. It's still in an uptrend. It's not really going very far, very fast. But the telecoms all generated some decent performance. They didn't go down. So this may indicate, and I just wanted to push this out there, what is the powers that be believe all of these companies I named all have heavy debt loads because they borrowed money to build out 5G. Interest rates go up, they're paying the debt. But if interest rates go down, it's going to benefit their stock and help on free capital. And so therefore their cash flow will be a little bit better. And so when you start to see the telecoms rally on a day like today, something's going on. And it's all of a sudden people decided they wanted to get out of Meta and buy AT&T and Verizon. No, I think that it's maybe people feel that with today's number of the PCE, perhaps there's better reality. The Fed's going to eventually lower interest rates and not tighten. So, maybe the market thought the Fed was going to start to tighten. I don't think tightening's in the picture. 6 rate cuts, whoever came up with that was crazy. In the meantime, we want to stay away from Autodesk, stay away from Salesforce unless you bottom picked it already. It's in a sell signal. It could have a dead cat bounce, and it needs more work. Too much of a gap up in the market, and it needs a little bit more work before getting excited about that. Intuit, ServiceNow, oof. These stocks could come in just a little bit more. They're not presenting a good low risk, high reward opportunity. Unless in the extended hours you get really cheap prices and you can trade them overnight. That seems to be where some action is. But what I do see is Pinterest to the upside. No one wants to talk about that. Apple's freaking me out. It's a trading range. The last time it had a high close doji after a rally or a sideways action, it didn't go anywhere. Maybe it's got a little bit more upside. Test 200 one more time. Volume does not dictate that chase this stock other than maybe short-term trades. This does not look like a sustainable new uptrend unless massive volume comes in here. So this to me looks like it's a trading range, gets to 200, 202, maybe breaks the buck, and you'll probably see the market turn back down. Don't be chasing Apple up here. I wouldn't advise it. Casino operators, wow. All kind of like weirdness prevailing. Today's PCE number said that consumers, this is weird because the Bureau that puts this out, the agency that puts the consumer price expenditure data out, first and foremost said that gambling revenues were down. Gambling revenues. So that's probably had maybe a couple things to do with DraftKings. Maybe during the summer, there's not as much. I don't think people bet as much on Major League Baseball, and I don't think people bet as much on Stanley Cup playoffs. And they certainly, if you're gambling on golf, you got a gambling problem. So the major essence of gambling will start to come back in the fall for football. And so maybe this is just taking a little a step back, so to speak. But even MGM, Caesars, and you take a look, some of these names just don't even win. Doesn't look appealing. So the sector itself is going negative. Gold miners still in an uptrend, by the way, on a monthly basis. Transports, half of them still good. UPS, as bad as UPS is, it's bad because it's in a downtrend, and it says down, and it's not good. But United Airlines is still in an uptrend. It did not ruin its uptrend today. Lyft, Hawaiian Air, FedEx doing a little better, didn't ruin its uptrend. So there's a shot that we are a little oversold. This stock, I would stay away from JetBlue. $5 stock does not look fantastic. Next, we're going to be taking a look at biotech this month. We got Biogen with a monthly high close doji. That's the trade of the month. Biogen looks like it's ready to explode to the upside. I like Biogen. Seasonally speaking, June's a good time for biotech. So any small dip, 21 to 11. Unfortunately, I do want to point out to you, we anticipated by looking at short-term stuff, we already bought in on Biogen. We bought half position at 23. We added at 214.85. We're already engaged. So if you can kind of get the average, I mean, it's not a big deal. You're talking, what, 219? So if you can get in around 219 on average, I don't think that's bad. So it's at 220. Let's round up and say 225. So, I mean, can you get it 219 right in here, 220? May want to engage on a Biogen trade right there. That's a nice setup. Vertex Pharmaceutical, Amgen also looking good. Healthcare, it's really the action is going to come in oversold drug stocks. Johnson & Johnson did not turn around on a monthly basis, so we need to wait for that. But we had, again, Eli Lilly. That's not a high close doji. But let's take a look. Teva is a generic drug maker, Israeli. That's not, it might have more upside. It's got positive momentum, especially if you get generic weight loss drug medicines out there. And then Novo Nordisk, but I think you got two names in this space that are way oversold that might see some recovery. This is a sell signal technically, but it's way off its lows. It's called AbbVie. This is Abbott Lab. It was in a monthly sell signal last month. It had follow through this month. It's not a new sell signal, but I would have to say we want to watch the volume because the seasonal trend for this and the volume, the lower it went, there wasn't as much weak volume into there. Bristol Myers. We also have Pfizer. There's another one. Pfizer did generate a monthly buy. So Pfizer would be one I think you can go with, despite, the volume here looks like a lot of people have been buying it. It got a bid right in here around 27. They dumped it down to 24 and change. Look at the volume. It never went negative. So what that suggests is that someone maybe got stopped out, artificially pressed the market. They dumped it before a pump. I think there's more pumping coming to the upside. So you want to watch that. All utilities, brand new buy signals for the month. And that's where we're looking for heading into the month of June. I think some select technology, short-term trading, but biotech and drug sector stocks, one of our main focus. And I hope you enjoyed our complete roundup of top to bottom and then what we do in the general trading room. And the bottom line is, do I feel I can help traders do better? And the answer is absolutely. I do it every single day. We teach seminars. And if you want some more information, then sign up. Come check out the website, personsplanet.com. Come and look at this June 12th, 19th, and 26th. Easy stuff. I thank you for your time. And I know this was a long video. Most people go, hey, listen, John, YouTube should be 3 minutes. Stop this. But I'm very efficient, and I like to make sure that you see what's going on and be completely transparent. A lot of people say, look, a brand new car, brand new house, and I'm flying a private jet. And it's all rental and it's a crock. You know what? The bottom line is, if you have the equity to invest and you want to know what's going to give you the best odds, as far as a technician is concerned, I can help deliver that for you. Bottom line, attend my workshop. I guarantee you won't be disappointed. Until next time, I'll update you as the days progress on any more new trades that we get or what the indicators suggest moving forward. Have a great weekend. Thanks for listening.